Welcome, I'm Jim Farrish of SectorExchange.com. Each day on our website we publish a chart of the day, which you can see right here. If you'd like to receive it, you can receive it via RSS feed or by email. It's actually produced every morning, so if you'd like to receive that free of charge, you just go to our website and sign up. And yesterday, one of the things that we produced was a piece on the small cap index. Why the small cap index? When we look at the small caps, what I want to see here is that here's the Dow Jones 30, and what we see is that it has eclipsed its October highs right in here. And if we were to pull up the NASDAQ index, what we would see is the same type of chart where this has eclipsed its high. Even though we've pulled back and tested this, it eclipsed that high. The S&P 500, very same thing. And then if we look at the small cap index, what we see here with the S&P 600 is it has not even come close to actually breaking above that. And the same would be true of the Russell 2000 small cap index. It has not eclipsed that high. So my point is, as we go into January, over the next whatever 60, 70 days here, one of the things I find are very important is the old myths such as the trend is your friend, all the things that we talk about in the market cycles over our investment careers. One of the things is small cap, what it does in January sets the tone for the market. But I think more importantly is looking at small cap is growth. In other words, what is happening relative to growth, and is growth leading the market forward? Right now, we don't see that as a true indication. In other words, the small cap growth stocks are not leading this market higher, and that really tends to be a challenge right now, I think, looking into the new year. So what I want to do today is essentially look at how did I get to this point, and then how can we play this. And what I came up with was, if you look at the scan button right here, then you can actually go down here and you can create a scan, or you can open a new scan. All I did was create a new scan, and I went under here to add conditions, and I'm just going to do this quickly so that you can see how simple it is sometimes to do this. But what I was looking at was the price and moving averages. So if I were I'm looking for the moving average here. You can see the top white line is the 20-day moving average. The bottom yellow line is the 50-day moving average. So one of the scans I was running was the 20-day crossing below the 50-day moving average, which you can build right there. So I looked for that cross. And when the small caps came up on this a couple of weeks ago, one of the things that started to hit me was, is growth really driving this market? And I came to the conclusion that I did not really see that as a driving indicator. And now what you can see is price is really trapped between the 20 and 50-day moving average on the small cap index. So you can run an additional scan for price being between the 20 and 50 day, where they've already crossed over. That's one condition. And now the other condition is that they're between. What am I going to get when I come up with that scan is essentially a consolidation or a triangle, whereas if I drew trend lines across here, that's what you would see. Exactly what's going on right here with the small cap index is essentially we have a triangle or a consolidation wedge that is building on the index, and price is now trapped between these 2 points. So this simple scan, what it comes up with is consolidation patterns, and what I'm looking for is a break up or down off of that pattern, and that's what we're seeing right here with the small cap. It just happens to be we're in December, we're heading into January, and we're looking for whether or not growth is leading this market, which goes back, if we pan this back in and we said, all right, let's draw a trend line now from here and see what the trend of the S&P 600 small cap index is. What we see is that we broke that trend. That uptrend line was broken. We're now consolidating. If we were to break above this wedge or triangle and retest this high up here around 330, that would bring this trend line back into play potentially for the S&P. Now, how do you play it? IJR is the simplest way, because here's the ETF for the small cap 600, and you can see the pattern is very similar, the trend is very similar, everything's actually identical. And or we could look at IJS, which is the value index for the small cap, or we could look at IJT, which is the growth index. But all of these are very similar. So if we're looking for, we would look just simply at IJR to break to the upside, and then when IJR breaks to the upside, then we could play that. Or if we said, well, what happens if it breaks below that, then we just come down here. I put into this index scan list both longs and shorts, so I can come down here and say, all right, SBB, this is the small cap short index, and if I pan that back, you would see very similar type triangle pattern here on the short side, which is just the inverse of the long, and I would be looking for the same thing to happen. I would be looking for this to break out of this wedge to the upside, and then I would play the S&P short. So there you go, a way to play the S&P long or short based on how this market pans out going into December and January. Perfect opportunity for you. So learn, I think it's really simple to use freestockcharts.com. Just scan, watch, and play. That's something that we do each and every day with sectorexchange.com. Log on to our homepage. You can try it for free. We have subscriptions to it. You can roam around the site, but take advantage of the opportunity each and every day. Thanks for joining me. I'm Jim Farrish with sectorexchange.com.